In April 2021, Google reported that the search, "When is the housing market going to crash?" had spiked 2,450% that month. That means a lot of you have this question, and I'm going to help you answer that in this week's video, so stick around. If you're new around here, my name is Danae Hewitt, your go-to DFW realtor. On this channel, I like to give you all the tips and tricks and advice having to do with real estate. So let's get into it. Many agents are being asked the question, are we in a housing bubble? What is a housing bubble? Is this bubble going to burst? Well, what does all of that mean? A housing bubble is when the prices of home increase very rapidly. And this happens when the demand for a home exceeds the supply of homes on the market. Many people can say that's what's happening right now. Home prices are rapidly increasing, but there aren't that many homes on the market. But there are a ton of buyers out there. Why are there so many buyers out there right now? It has to do with our mortgage rates. We are at a historic low for mortgage rates, and there are so many people that want to take advantage of them, whether they're buying a new home or refinancing right now. With all of these buyers wanting to take advantage of these low interest rates, there are more of them out there right now than there are actually homes for sale. Check out this graph. In March of 2020, in the pandemic, in the middle of quarantine, there were 1.3 million homes for sale nationwide. Compared to March 2021, there were only 900 million homes for sale. Those are some staggering stats. In March of 2020, housing inventory was already low, and then fast forward to a year later, it's lower than that. So you can see how all of these buyers want to take advantage of these rates so that demand is really high, but the supply is really low because there aren't as much people putting their homes on the market. Coming up in this video, you'll hear me saying industry experts or the experts. Well, who do I mean by that? I mean 4 major financial giants. They are Goldman Sachs, JP Morgan, Morgan Stanley, and Merrill Lynch. These experts, they don't believe that we are in a housing bubble right now. A lot of people want to compare the market today to where it was back in 2006 and 2008 when the housing market did crash. So what's the difference between now and back then? Back in the early 2000s, mortgage lenders were doing predatory lending. They were basically doing what's called stated income loans, which means that all you had to do as a consumer was merely tell your mortgage lender how much money you made, how much debt you had, how much money you made in the last 2 years, and how much money you had in the bank. But none of that information ever needed to be verified. It was just simply stated and you were given that loan. So with that loan, you went out and bought a house. But when house prices dropped, you could no longer afford to buy that house because you were probably upside down in your payments because the numbers that you gave up front may not have been accurate. That is not the case right now. We have very tight and very strict lending standards because the industry has learned from their mistakes. Now, any mortgage borrower has to prove their income with pay stubs. They have to prove it with previous tax returns. They also have to show the last 2 months of bank statements to prove that they have money in their bank for a down payment and closing costs. So all of that information has to be verified before a mortgage lender is going to give anybody a loan right now. The experts say that the housing market is still very strong right now and that home prices are going to continue to appreciate, but they don't think that it's going to suddenly burst and pop and that home prices will drop to where their rates were pre-pandemic. The rate at which they're increasing, that speed, that'll definitely slow down because we can't maintain that long term. But at the end of that, those home prices are going to stay stable and slowly increase after that. If you're thinking about buying a home right now, but maybe you're saying, I'm just gonna wait this out. I don't wanna get into a bidding war. I don't wanna pay over the appraisal amount. And if you have any questions what paying over the appraisal means, check out this video right here. But if you're telling yourself, I just don't want to be in this market right now, I'm just going to wait it out, I will tell you that the home today is going to be more expensive a year from now, and your interest rate is also going to be higher a year from now. Let's talk about interest rates. They're expected to stay this low through the end of 2021 and even into the first quarter of 2022. Let's talk about home prices. On average, nationwide, homes are seeing an appreciation of about 7.7%. The home that you want today is about $300,000. 12 months from now, that price is probably going to go up about 7.7%. And 12 months from now, the interest rates are also going to be higher. What that means is sitting back and waiting a year is actually going to cost you more money on the home and more money on your interest rate on that home. If you've got that urge to buy a house, I know the housing market is tough for a buyer right now, but think about it. If you can do it now, then do it now, because a year from now, you're going to be paying more not only in the home, but also in your interest rate. I've done a ton of research to give you this video today, and I have linked all of my research in the description below. I've also linked my first-time home buyer's guide as well. If you're planning to move to the DFW area, I would be honored to be your agent and to help you do so. So leave me a comment below and let me know how I can help you. And then check out this video right here. We'll see you next week, everyone.